This is our Forex blog for April 29th, 2011. And one of the first things we do each day is see which currencies are strong. We buy the strong currencies against the weak ones. The real-time strength or weakness is right here on the top in histogram format for each individual currency. The dollar, yen are the two main pairs that we trade the bottom ones against. And obviously the dollar has a weaker daily, weekly, and monthly trend than the yen. Yen's weekly trend is down, but far less intensely so than the dollar. And the monthly trend's down, but also slightly less than the dollars. So if you see some weakness come into the dollar at or above the dotted white line, shows extreme weakness at 330, you want to trade that against one of the stronger ones. Now, the Swiss was strong earlier, but at 330 it wasn't really that strong, but it was losing its mild weakness it had, and the weekly and monthly trend were up. So it's safe to assume that at 330, the dollar Swiss could very likely fall. The Australian was strong even before that, so looking for buys in the Australian dollar would be a good thing to do. The euro had incredible strength earlier. Daily, weekly, monthly trend was up, and it had a little bit of weakness, but not intensely so. So you certainly could look for euro dollar buys at that time too. And those would be the highest probability trades. Let's start with the euro dollar that is the most popular currency. 330, right here in the middle, and you can see the price is above the hourly, which makes it more likely to go up. And it also, coming into today had an NR7 bar, which typically means that volatility is low, and breakouts are more likely to work after an NR pattern. And you can see there was another one intraday here. When it broke out, you got a nice smooth 25 pip move up. The pullback also give you 10-15 pip profit. Now let's get rid of the Trend Intensity Pro and add our two new tools to this chart just to show how they can really help you. Force equals mass times velocity, and we've coded that up into our software. The tipping point is the mass of the market. It's the percentage of currencies going up or down. It's a little bit more complicated formula than that, but that's it in a nutshell. And Momentum Pro shows how strongly up all the euro dollar pairs are going and all the dollar pairs are going down. So when this at 330 showed up on your chart, you can see there really wasn't very high percentage of euro dollar pairs going down bar by bar, and the net momentum of each bar was really moderate. The previous move up had a little bit of intensity up towards the top, and for the last 2 hours volatility's been low. It's above the hourly, and so let's say you bought this breakout right here of the little 30-minute sideways range, right? Certainly the momentum and it's above the hourly, and the narrow range pattern here, if it gets broken, it's very likely to give you 30 to 40 pip move. And so when it breaks out right here, very high percentage of the euro dollar pairs are going up, dollar pairs going down, but without that much intensity. So you don't know that the trend's going to continue. And whenever I see it, whenever I get into a trade with these new tools now, if it doesn't pop and explode up with high volatility, the force of this market's not that much. I usually cut my stop in half. I'm going to lose 4, 5, 6 pips there if I'm wrong. It's kind of going sideways here. Again, more of the pairs are going down than up, but with almost no momentum. So it's, certainly could put your stop a few pips underneath the low and have a 3, 4 pip loss here if you're wrong. And then it starts to go up. And notice, immediately on this bar here, you see, even though it doesn't look like that much of a bar, other euro dollar pairs are going up and going up only at a moderate amount, but that's one of the highest flips to the upside in the last hour. It's good if you're long the euro dollar that the euro yen's going up, the euro Swiss, the euro CAD, euro Australian, euro New Zealand, or at least the majority of them. And that's what this tool tells you. And this one on the bottom again tells you the momentum of that tool. So it starts going up. You never know if it's going to break the previous high, right? As it's going up here, there's moderate percentages of euro pairs going up and or dollar pairs going down, and the volatility starts to peak. So at that point you're already up only about 10 pips in this trade, so you want to tighten your stop, and once the momentum kind of runs out up here, you certainly might want to exit half your trade here. A little bit of a pullback, you move your stop up here, and as it goes up to the highs here and hits our upper containment band, very likely place to run out of steam, it doesn't really have that high of a percentage of euro pairs going up, and the momentum is less than average. So certainly a great place to get out, and you almost nabbed every pip of this. Now during the pullback, Usually when breakouts happen and a nice smooth trend like this happens, you can relatively safely buy the first and usually second pullback. Draw your trend lines over the bar's high. And notice on the pullback, initially there was quite a high percentage of euro-dollar pairs going down and dollar pairs getting stronger. Then it went down a little bit more. Mainly I look for pullbacks at the momentum. The momentum initially started off pretty high and got less and less and less. There's almost nothing right here. So when it starts to go back up, it's a great place to get in. You don't know what's going to happen. Initially, a pretty high percentage of euro pairs go up, dollar pairs go down, so that's wonderful. Although the move up to the high here has no momentum behind it. So it's very unlikely to break the high, and you get out of this trade with 8 to 12 pip profit. We have a counter trend sell signal right here, and aggressive traders that realized the first time up it really didn't have that much momentum, and it had even the double top and the second try to go higher failed. Aggressive traders might have went short right here, and guess what? Very high percentage of euro dollar pairs falling, dollar pairs getting stronger, very intensely so. So it pulls back and goes sideways. Because it's a counter trend trade, you don't know if it's going to go up again. So I'd get out of half my trade here with 10 pips. And then, usually the hourly moving average is a decent place to get out. Good place to get out of your trade there with about a 30 pip move on the counter trend trade on the second half of your trade. You actually made more money today looking for counter trend. The fact that it didn't break and stay underneath the hourly and broke out right here, you might have went long. But guess what? As it went up, initially it has pretty high percentage participation, but almost no momentum.